Hello everybody, my name's True Demon, and I'm the Devil Stockbroker. This video is going to be a tutorial on our Scourge Bot and the most essential command that is the basics for all of our analysis, specifically with short exempts. So first, a little introduction on what Scourge Bot actually is. Scourge Bot is actually a little bot that operates inside of our Discord. Most of the data that we process with ScourgeBot actually comes from FINRA. People have used FINRA data in the past to determine regular short volume. But what ScourgeBot does is it combines analysis of both short exempts, short volume, and FINRA data, along with other public data sources, and it analyzes them for unusual or anomalous activity in the market. And how ScourgeBot works is we essentially have a list of slash commands that exist in our Discord for others to use. The command that we're going to be looking at first is the basic command for ScourgeBot, which you can find is /inspect. Click on this command, and the first parameter that you'll need to supply is the ticker. So for this one, we'll do AMC, since that's one of our personal favorites. You can also set a date range on this to set a range of days that you want to analyze. So the most common one is 30 days. By default, the bot will show you the last 2 weeks of trading days, or 10 total trading days. So we'll go ahead and analyze the month of February 2023, 02/01, and then the end date 2023, 02/28. You can also provide a price interval for the charts. This will spit out some different technical charts that you can analyze for yourself also, and you can have it show you in candlesticks of either 1 day or 1 hour. So we're going to do just 1 day, which is the default. And after a short while, ScourgeBot will call up the FINRA data and it will spit out the results. So the first thing that you'll see with ScourgeBot is the short exempt stats chart. This is a table, basically an Excel spreadsheet, that shows you in descending order the days and the various stats for pricing, high, lows, open and close, the volume, which is all trading volume combined, the short volume, which according to FINRA is the total volume that was used in short trades, which can include both shorts who are selling to open or buying to close or covering their short positions, and then short exempt volume, which is a special short exempt status that is offered only to broker dealers and market makers engaged in, quote, bona fide market making activity. Essentially, it is a tool used by market makers in order to provide liquidity to the market by marking a short in order to fulfill somebody else's buy order, usually a retail trader. They get filled by the market maker selling a share short. If they cannot locate a share, then they can use short exempts in order to provide that share and match that offer at market price to their customer. Short exempt ratio is the number of short exempt volume divided by the short volume and then the number multiplied by 100. So this is a percentile figure. Short exempt ratio is useful for determining when there is a high concentration of short exempts versus short volume. Typically, we look for consecutive days of greater than 3%, which if you can see here on this chart, there's been a lot of days in AMC's recent trading history of the month of February where it was much greater than 3%. So that's something that we look for. The next two columns are the short exempt ratio delta rate and then the delta rate of the delta rate. Delta rate is just the rate of change or a percentage showing the difference between the current day's short exempts and the previous day's short exempts. So these delta rates are useful for determining if there has been a major spike in short exempts and determining how significant that is. After that, we have short exempts over total volume. So that's very simply short exempts divided by total volume. This tells you how much of the trading on the day was created because of a short exempt. And then the short volume divided by total volume to show you what percentage of total trading for that day was short trading. And then we have the 5-day simple moving average, which is showing you the price at the close of the day for the 5-day simple moving average. And then the delta rate, which shows you the rate of increase or decrease in that 5-day simple moving average. Big increases, such as by 5 or 6%, like you see here on February 21st and 22nd, this is a very significant amount of price action. And as you can see, the price went from a previous day's close of $5.24 up to a $6.10 level. So this is helpful for identifying price spikes. And then the last few columns show the threshold list if the stock is currently on the threshold list for the day. Failures to deliver, which are 15 days delayed, so these usually will show up as 0 unless you go very far back in time. And then the FINRA volume ratio, which shows you the difference of FINRA volume versus exchange volume. We really like to focus on the volume, short exempt volume, and short exempt ratio. These are the areas that are most significant because what we're essentially looking for when we look at this chart is we're trying to identify very large spikes of short exempts because this indicates a lack of liquidity in a stock. Specifically, we're looking for large amounts of short exempts at a time when a stock is either in a very tight trading range, meaning it's not moving very much and the price is highly consolidated. This indicates that there is buying activity happening at a floor or a support level and could indicate a bounce coming. As well, if we see very high short exempt ratios, then that tells us that there is a massive lack of liquidity in the market and the market makers are using short exempts because they are either A, unable to locate shares of stock to borrow in order to fulfill their customers' orders, meaning there's not a lot of institutional lenders that are offering those shares. So they have to take a short exempt, meaning failed to locate, and they deliver a share that essentially came out of thin air. It's basically a naked short. So this is a reliable but conservative method of detecting when naked shorting is occurring because short exempts are one of the only documented daily ways of detecting whether there is possible naked shorting happening in a stock, exclusively with market makers. There's no way to really know how many shorts are actually naked shorts with brokers, but short exempts, we can estimate that a good portion of them may have failed to locate. And because of that, these specific short exempts have essentially rules placed on them, meaning that the market maker has to deliver those shares at some point in the future. Specifically, there's a rule, T plus 4, which is the day that delivery is expected for that share that was short exempt. If the market maker does not deliver by the 4th trading day after the transaction, then that becomes a failure to deliver. The market maker can only fail to deliver 2 consecutive days, so there's an additional T plus 2 settlement time on those failures to deliver. If the market maker fails to deliver a significant portion of shares, they can be fined and penalized for failing in their market making obligations, and FINRA or the SEC can step in order to impose fines and penalties for them or even restrict their ability to trade certain equities, which is extremely punishing for market makers because highly illiquid stocks are where they make their most money. Next, we'll go ahead and move on to the technical chart, which is helpfully includes a 1348 EMA crossover lineup. So the yellow line represents the 13 EMA and the 48 is the red line. And there's also a MACD oscillator and an RSI included here with date timeframes. This can sometimes be helpful for at-a-glance technical review of a stock and see what it's doing compared to days when those short exempts are particularly unusual. And then below that, we have the short exempt, and FINRA total volume represented in line graphs that can help you detect when there is major spikes in them. Specifically, looking for very large spikes of short exempt volume are an indication of illiquidity, especially if it coincides with high volume overall. So if there's a lot of volume happening, but not a lot of price action happening, this is typically a sign of incoming volatility as a result of an illiquid market. To put it simply, when there's not a lot of shares available in the market and the market maker is forced to basically provide shares out of thin air, they are taking a risk that they will find those shares at some point in the future. If demand continues to remain high and the market maker is unable to keep up with demand, and they are unable to detect any supply from anywhere else, this can cause major moves in the price to the upside. This is why ScourgeBot is so useful and why analyzing this data can be so helpful for somebody that is speculating on a 30 to 48-day swing trade. It's been my personal observance that within 30 days of major price action, or rather major short exempt volume spikes, there typically follows some major price action within that 30-day time span with a maximum of 45 to 50 days. So sometime in that trading range, you can actually take a long position and swing those. You can take those swing trades and capture 20-30% moves at some point in the stock. It's not a precise method, but it does give you a really good idea of what stocks are highly illiquid, and you can do other things, perform your own technical analysis, review fundamentals of the company, and determine whether it's a good investment for the long term for yourself, as well as determine if it's popular on social media and if that particular stock is seeing a lot of interest from retail investors in the public. So this concludes the tutorial on the /inspect command. If you have any questions for me, you can feel free to ask in our Discord under the Demons floor, where we talk about these different commands all the time. And if you want to use these, we ask that you politely use the ScourgeBot spam channel underneath the Demons floor threads, just to keep the Discord nice and clean. And if you're not a member of our Demons support tier, unfortunately, you will not have access to this command, but you can ask another fellow Demon member or one of the analysts on the team to perform any kind of query for you, and we'll be happy to provide. Thank you so much for watching, and we'll see you in the next one.